So that was a great overview of open finance. The challenge, of course, once you start to build a platform that gains scale, is how you manage that. And so, what I'm really pleased to be able to bring is to invite Mohan Bhatia. He is the author of Banking 4.0, the Industrialized Bank of Tomorrow. Welcome, Mohan.
Thank you, John.
So we heard a lot about the opportunities, but and of course India has a lot of opportunity for scale, but as scale creates its own challenges, and I think there's discipline needed in how to in how to manage that. Can I just check your audio, perhaps? Maybe
Am I audible? Am I audible?
I can hear you okay. Yes. Okay. It's just be careful about your how close you are to your microphone. Okay. All right. Over to you, Mohan.
Thank you. Thank you, John. Thank you for the warm introduction. So, all of us are aware of Industry 4.0. So, if we look at industry, it has actually transformed itself in the last century or 1.5 century, where it started with the electric power and then it went to automated and entire supply chain, etc. Then it went into the entire adoption of robotics and automation, and now we are talking Industry 4.0, which is actually building the intelligence into the machines and so on and so forth. Similar things actually have happened in the banking industry also. So banking industry started with adoption of a core banking solutions on the mainframe. Then they went and got the open system core banking, and then they got into channel and self-service and that entire workflow and automation, etc. And now we actually are talking about building intelligent banks which actually can interface and deliver their services to machines, to applications, to super applications, as we were hearing in the previous session, to marketplace, etc. And who can actually interface with human beings. So they can actually interface with the unstructured data and so on and so forth. So that is what we call actually as a banking 4.0. And this entire thing to support intelligent machine interfaces, which can interface with machine and human, banks need to industrialize. They need to industrialize and transform their technology, as well as they need to industrialize and transform their business processes. So we will actually discuss in the next 25 to 30 minutes why industrialization, banks are talking about industrialization and banking 4.0, as well as we will talk about why what are the steps actually to go towards it actually. So hopefully I am audible. I don't know, my camera is not seen here. So the question is that why are the banks industrializing? They actually are industrializing for building the intelligent banks with which can interface with human and machines. The primary reason why banks are industrializing is because customers have changed. We actually are talking about the generation Z in India, specifically. More than 45% of the population is born post internet. So what we call it actually as a generation Z, who actually are born with the internet. So they actually are born with that channel and self-service, etc. Now that their expectation is changing and they are going with the digital experience, and they are talking about lifestyle and delightful experience, etc. And they want, as we are seeing, open banking and open economy, open finance, etc. They want value addition from the banks in every stage of their customer journey. And they have shifted their residence, so they no more come to branches, they no more come to the applications, internet banking, mobile banking, but they are permanently resident in the super applications, or they are permanently resident in the marketplace. So if banks need to service them, they need to reach out to their marketplace, etc. And if they need to reach out to the marketplace and other things, they need to completely transform and industrialize the entire bank. The other thing is that technology development, the entire cloud infrastructure and acceptance of the cloud infrastructure also by the banking and BFSI regulator. It's basically, you can say, is the wake-up call where banks actually need to enable, or they need to actually transform themselves so that they can actually take advantage of the cloud infrastructure. And that cloud infrastructure is also changing from cloud as an infrastructure to service, and now we are talking about banking service, platform banking, etc. And ultimately we are talking banking AI as a service and so on. And as a part of that cloud, there is an entire industrialization of data platform which is happening, and which actually has completely changed or created a platform to provide and build AI and machine learning services. And then we are actually talking about the movement from that robotics and automation and self-service into the intelligent banking and other thing, which is actually enabled by the technology developments and other things. So these are the two primary drivers. In addition to that, there are external drivers which are actually happening. One basically is that entire thing is we actually are talking about now interest rate increasing, but still we are in that very low interest rate regime. So, and in that low interest rate regime, because that interest or the income coming from interest segment is low, banks actually are talking about high cost. Their actually cost to income ratio actually has gone up, and they need to survive, and so they need to find out their income sources from the non-interest income related areas, etc. Then their regulators have also become technology savvy. They are talking about sandbox and all the initiatives which government and regulators they have actually taken, and that also is necessitating that banks need to industrialize their internal process, etc., so that they can actually cope up and they can map the requirement from the regulator. And obviously the new opportunities, business opportunities are in the marketplace, so they need to actually enable that. And obviously fintech, which started actually as a wake-up call in 2012-13, and then it became the competition, and then it has become partner, but now in 2022 it has actually become the innovation benchmark. So such innovation benchmark of fintech, they need to be taken, absorbed, and banks need to cope up and go up to that level. They need to really make changes internally, and they need to industrialize so that that journey, or what I call it actually as a banking innovation in a BAU mode, it becomes easier and faster. So this is basically the primary reason why banks are actually industrializing. And this industrialization journey, the journey from automation to industrialization, is basically not a smooth journey that it actually we can actually move from automation to industrialization. There is actually a big gap in between, and there is an entire transformation which needs to take place. So as a part of the banking 3.0, to extend the envelope, to push the envelope, etc., banks went and actually did this entire RPA and workflow and analytics, etc., so that they can actually improve and provide the self-service, etc., and that entire automation has taken place, and that actually has taken place for the high volume, low complex type of things. But now we are talking about providing that human interface and dealing with machines, etc. We are talking about conversational banking, banking AI, and predicting risk, etc., which is actually high complexity, low volume type of transactions which we actually need to do. So that complete transformation actually is needed if we are to move from basically the automation to the industrialization and other things. Now, how this banking 4.0 actually looks like, that in the industrialized bank of tomorrow. So when we actually are talking about delivering banking 4.0, we are talking about the digital experience. Now the digital experience has to be has to be delivered to not only to employees and partners, and not only to customers, but also to employees and partners. So when we are talking about industrialization, it is actually giving that digital experience to the entire ecosystem, because we actually are talking about partners of marketplace and other things. For that, what is needed is that banks, they need to actually industrialize. They need to industrialize their back office. They need to industrialize their front office, and then they need to provide the digital experience both in back office as well as in front office. So what does it basically means is that when that intelligence was actually built as a part of improving the productivity, etc., in the back office, and providing the digital experience in the front office, it needs to actually strengthen at both the side, that we need to provide the productivity improvement, etc., in the front office, as well as we need to provide the digital experience in the back office. So ultimately what we are talking about is that creating that hyper personalization and building the API banking, etc., in the front office, providing the persona. And that API banking, what we are calling it actually in the front office, that transformation needs to be done actually internally also, so that back office is also strengthened. It is also made more configurable, etc., and it can actually be industrialized, and it can provide the digital experience internally. So this ultimately, both the things coming together, that industrialized back office and front office, and digital experience in back office and front office, is what actually will lead to this entire banking 4.0, which is basically building this entire digital experience and platform banking and API banking, where we actually are talking about selling the third party products, etc., talking about selling the non-financial products, etc., integrating with the marketplace, then entirely industrialization of that entire risk management, finance, compliance. So there is a lot of uh, whenever we talk about open banking, or whenever we talk about customer onboarding, whenever we talk about this entire credit and other things, a basic element there actually is that entire finance and compliance and risk related thing. And that, what we can call it actually as a risk as a service, and finance as a service, and compliance as a service, actually that need to be built. And I have mentioned that actually as a 3.0, because still there is a lot of work to be done to build intelligence into it. At present, banks actually are targeting actually to build 3.0. They are actually targeting to build a single platform. They are targeting to build basically the automation into it, etc., so that the entire intelligence which actually needs to be built, that can be actually supported, and so on, so forth. So we actually are talking about creating banking 4.0, where we actually need to transform back office and front office, and back office need to be actually in sync with the front office. As we know that in the past decade or so, with digitization of the channels, there was a substantial investment which went into the front office for digitization of the channel and delivery. But that investment to that extent in the digitization of the back office has not gone. And probably in the last 4 or 5 years, or since that, there was a focus on the KYC and knowing the ultimate beneficiary owner, etc. There was a focus on the digitization of the back office. But this basically, that focus on industrialization and digitization of back office is coming back, especially because now there is some amount of investment also available in the risk finance compliance area, because of that respite which has come from Basel, etc., that Basel has not come out with the new requirements, so on and so forth. So that is actually an opportunity which banks probably are using, and they actually are industrializing their entire thing. So ultimately, we actually are talking about building the intelligence and human interface into the machine, so that machines of the bank actually, they can interface, they can interact, they can integrate with the machines and applications from the partner ecosystem, from the marketplace ecosystem, as well as from the customer. Because what is happening is, customer no more comes to human beings, they no more come to the bank either in their branches or through their channels, but they actually come through the entire super application, WhatsApp banking, Google Pay, payment, Paytm, etc. type of payments, etc. So they need to actually build that interface so that they actually are able to manage the machine interface of the customer and partners and so on and so forth. So that is basically the transformation. That is what we actually call it actually as a banking 4.0. In my book, actually, I have covered this thing in a very detailed manner, that how this entire interface, etc., is actually can be covered. So ultimately, when we talk about this building this, we actually are trying to create actually a platform. We what we call it actually as basically as a API banking or the platform banking. Now this is actually required not only for the external interfaces, but also it is required internally if we need to actually, if we are doing that what we can call it actually as an industrialization of banking. So in case we need to do this unbundling, and we need to actually do unbundling and rebundling of our services, and we need to be ready with basically within the time frame, etc., so that we can actually use those opportunities which are actually thrown open to us from the from the external environment. Then this entire transformation is actually, banks actually are taking that transformation, or banks actually are transforming their entire application infrastructure, where they actually are transforming them into APIs. Some APIs will get published, and that published APIs will be available externally for the external partners and customers to consume, while there will be a lot of, or you can say the ratio of internal to external maybe 9 to 10, 9 to 1 or 9.5 to 1 type of thing, where such type of transformation actually has to take place. The other thing is that banks actually are enabling basically their interface with the marketplaces. So we actually know that banks actually have been selling their own products, they have been selling third-party products, they have been selling the financial and non-financial products. They actually now we actually are talking about integrating banks actually into that entire customer journey, and then integrating it actually in that entire basically that third party non-financial products and so on and so forth. So that actually gets enabled, and for that enabling that, what is needed is that we need to build the completely API actually infrastructure within the bank, and we need to actually transform that. So the public persona which comes from that API banking, actually it is actually built on the foundation of API infrastructure which gets built internally within the bank. So ultimately, purpose of industrialization is to sustain innovation in the BAU mode. Why they need to sustain innovation? Because there is always a pressure to manage cost and uplift the revenue. So I've given some examples where we actually have seen happening that banks actually are transforming the infrastructure. They actually are transforming and getting into that banking 4.0 and industrializing their completely application infrastructure as well as process and technology. Ultimately, the purpose is actually to manage. So if you look at the cost to income ratio in many in the developed world, especially in Canada, US, and Europe, the cost to income ratio is actually 80%, and we actually are talking about 0 to 2 or 2 to 3% type of interest rate regime. Even after that increase which we are talking now, that will continue to have that cost to income ratio of more than 80%. While in India, many of the best run banks, basically between public sector and the private sector, they are actually, we can talk about, we are in that 6% or 6% plus interest rate regime, and we actually are between either the 40 to 60% or 35 to 60% type of regime. But the thing is that this entire transformation is required, so that banks actually, that the pressure they have got on the cost as well as on revenue. And there are so many things which actually banks are doing, and these were the examples which I saw when we actually were engaging banks in their entire transformation. They are also transforming that entire risk, finance, and compliance. And as I said, that is actually happening, that entire industrialization is happening. Probably it has to go hand in hand, because many times we have seen that that digitization initiatives at the front office, they actually are not giving the requisite results, or they are not giving the requisite business outcomes, because that transformation of the back office or risk finance compliance actually has not taken place. And we have seen that when that industrialization is happening, at what we call it actually as a credit risk 3.0, AML 3.0, fraud risk 3.0, etc. What it basically does is that it transforms the you can say effort, or the manual effort requirement. We have seen that actually that it can reduce up to 40% of the manual effort, and at the same time it transforms the skills requirement. So what used to be basically the time and effort spent in the transaction collection, ultimately that is actually taken, it gets transformed into the effort required for doing the predictive analytics, etc. This actually has happened. I have covered actually in my book also this transformation case studies, and specifically covering some of the banks like DBS from say Singapore, basically, which actually has gone and transformed its risk finance compliance function, and it has completely transformed its skills and cost structures. And it actually needs basically this entire continuous allocation of capital. So if you look at the entire transformation journey of all the banks, I've covered around 50 banks in my book as a case study, starting from DBA, Citi, Large Banking Group, State Bank of India, Kotak, SDFC, ICICI, etc. What it basically needs is that it needs continuously the capital allocation for in this entire transformation journey, the commitment from the top management, etc. And ultimately, they need to run this six engines of innovation and industrialization. One basically is that build that all-pervasive intelligence. Other is this entire technology investments, which needs to be supported by their capital allocation, etc. Build agility, scalability, and resilience. Adopt the cloud and or build their internal cloud, etc. Build that entire digital experience, industrialized data platform, and build banking AI corpus. The thing is that we actually talk about AI and other things. Unfortunately, the AI which banks requires, it requires the accuracy level of more than 93%, as basically as it is very equivalent to the manual accuracy level, etc. And the existing Google and Microsoft and other AI analytics, etc., they actually don't provide more than 40% out of the box type of accuracy. So there is a substantial amount of investment and focus that need to be built by banks actually to make these engines work, so that ultimately, because if you have to go from left to right, that banking AI which needs to be built, or the all pervasive intelligence which needs to be built, actually, unless that engine is triggered and it works along with other engines, it actually, that journey towards that industrialization may not be easy, and so on. So this, all the six engines, they need to be actually fired together, and so on and so forth. So ultimately, banking 4.0 is not, it is an iterative process. It actually will take it actually will take more than a decade actually for that entire transformation. And that entire thing, actually entire focus of the bank should be dedicated to innovation. So I've identified this 13 area of innovation where the banks need to continuously invest, and bank need to continuously focus. So I'll be open for question, John. Back to you.
Thanks very much, Mohan, for painting that picture. And I think some of the things that struck me, particularly what you mentioned early on about facing high complexity and low value. I would probably add to that high volume and low value, because when we have banking services in Western countries, we're often dealing with the top level of customers in terms of the wealthiest customers. And when you want to extend financial services to make it more inclusive, you end up with a lot more volume, but for each one of those transactions, it's a lower value than previously. So you have to be able to manage that at a reasonable cost. You talked about the high cost to income ratio. I think I like the term cost to serve because it it focuses the mind on this is a customer and this is how much it costs to serve that customer. And if the value of the customer's business is only a certain amount, then you're not going to make enough to profit and to cover that expense if you have a cost to income ratio that's too high. So I think the imperative is certainly there for the banks, particularly in India, as they scale to reach more customers and bring more customers into the banking system. But there are some trade-offs here, aren't there? There's you want to have some diversity of your products and services so that you can meet varying the needs of different customer segments, and you need perhaps the people who are closer to those customers to have the autonomy to make decisions. But then you need to also have discipline and standardization in order to achieve the economies of scale that you need to drive a lower cost to income ratio. How do you see banks sort of balancing that?
Banks actually, what is happening is that most of these projects at present are taken as a part of the product or business unit. So some of the banks actually who are actually visionary banks, they are taking it as at an enterprise level. So those banks which actually are able to take that enterprise level, they actually have started getting or gaining this benefit out of the industrialization. So good thing about this actually that entire transformation journey is that it is also can be used to create actually what we can call it actually as an enterprise, or when we whatever we call it actually as a cross selling, etc., that presenting that entire banking and enterprise services to the customer. So one of the trade-off, as you said, basically that how do we actually service the customer, high net the individuals, etc., is basically if we can create that entire industrialization and present that entire bank, for which actually that transformation internal that converting them into this API and other things actually is also needed actually as a part of that.
Okay. Well, thank you very much for sharing your expertise in this area. It's a very multifaceted finance ecosystem now, with the traditional banks, the digital challenger banks, neobanks, and other financial services providers, and even companies in other industries. So it certainly has. It is certainly imperative for banks to sharpen their digital delivery of products and services, and you've shown us a great framework for that. Thanks very much, Mohan.
Thank you, John, for inviting me.